and welcome. Let's go through the cross asset class analysis and see what we can pick up and what our short term and medium term outlooks are currently. This was a pretty predictable outcome, pretty predictable retracement in SPX, in equities, and in Bitcoin as well. The outcomes were binary essentially. Either Bitcoin is breaking into the all time highs, or we are getting what we just saw over the previous couple of days. It has nothing to do, well, I shouldn't be saying nothing. Everything is flows. Everything matters at a specific point in time. Everything plays its own part, obviously. You can justify moves whatever way you want to justify them, but at the end of the day, the flows and the structure in the market moves as it moves based on similar sets, based on correlations, based on the prevailing forces. So let's go through the rate sensitivity complex first. And the rate sensitivity in the face of the dollar, gold, rates themselves, and high yield, all of this has been pointing to the fact that the long end of the curve in the US will be breaking out again. As we outlined on Twitter, we've said that things like TLT, that we are initiating a big short position in TLT on the 1st of April, worked out pretty nicely so far. The thing is, we are likely to get some sort of a digestion and consolidation in rates, in dollar as well, in gold, right before, for the next 2 weeks, 2-3 weeks, until the 28th, 29th of April and 1st of May, when we're getting the PC report, FOMC meeting, and QRA composition from the Treasury. These things will determine the direction, the future direction over the trend basis for the long-term rates. Whether this rally will continue or not, we shall see. The thing is, at some point during this year, we are going to retest the previous cyclical highs for the long-term rates. It's going to be happening whether this month, next month, 2, 3, 4 months in the future, based on the supply shock, based on the amount of bonds that are going to be issued. But the Fed policy plus the economy and the regime of reflationary regime we are currently in is not supportive of long-term rates falling. Everything points to the fact that the private sector right now is the only one left to absorb all of this issuance, to absorb the private sector essentially is setting the price for the long-term rates right now. Besides the times when Treasury and Fed decides to manipulate the yields by doing QE, by issuing more at the short end, at the long end, the way we've seen this over the past 3-4 months after the Halloween, when we got the previous QRA announcement. At the same time, we don't have the RRP facility to the degree that we had it. It is below 400 billion, and it will run out in sometime in the summer. And what are they going to do then? The QE taper is assured. We know this. It signals just debasement, more debasement than everything else. We shall see in the 1st of May what is the reaction of the Federal Reserve to the previous inflation print, where we've seen we've been calling for this for half a year already, that inflation will not get back to the 2%, and the sticky inflation will come back, and we are seeing currently re-acceleration, plus the geopolitical environment right now is not supportive of lower oil prices, and we've seen oil prices rise significantly over the past 2 months, which is not supportive of the inflation coming down as well. Yes, there are shelter disinflation in the pipeline. It's balancing itself, but the base effects are going to be getting easier and easier and easier, especially by the end of this year. Base effects are going to be so easy that seeing inflation at 4.55% by the end of this year, can you imagine if inflation does print 5% by the end of this year? It completely destroys their credibility, especially if the Powell in the next meeting doesn't come out and say decisively that yes, we acknowledge this is what we've been waiting for. This is why we've been saying that we are reticent to cut rates currently, and we need to see more confirmation. And he has to come out and say, yeah, let's start raising rates again. If he doesn't do that, if he still plays the same drum that, oh, wait a second, we're going to wait a little bit more, and this is not enough to confirm anything, market is going to call the bluff pretty fast on this, and we will see correlation completely decouple. Very interesting how the dollar and rates are going to trade in that environment. But before that, the trade in rates, the trending and the trading direction in rates is higher. Obviously, this brings the dollar higher, and we've been pretty surprised by the resilience of SPX and Bitcoin, even though both of them broke trade on the day when CPI came out, when dollar printed this massive move higher. We've seen Bitcoin just mildly reacting to this, but in due time, obviously, we broke the trade, we broke the trend. Bitcoin and the environment is supportive of a more prolonged and deeper retracement in risk assets currently. That's it. That's what I have to add on this point. At this point, the Dixie is supportive of the Bitcoin and SPX retracing and holding lower prices, seeing lower prices. Gold is decoupling from everything else. It's going to be very interesting how it's going to trade in the face of all of this. Long end rates are not done yet going up. They might stall in around this region, but at the end of the day, however long we might spend in and around 4.6, 4.8%, the move into the 5.5% is inevitable at some point. It's going to come sooner than later, methinks. High yield is pointing to this move in high yield is what you get from the correlations. This is what you get when the long end rates move as fast as they do and as high as they do. High yield breaking lower, and finally the SPX is reacting to these kind of things. And after breaking the trade on this day, after some point of consolidation, we've broken down lower. This is a dip. This is not something akin to this. This is not the beginning of this. This is a viable dip on a trending basis. We're going to consolidate. We're going to fall. We don't know how far we're going to fall, but at some point, the conditions probably will reverse, because if this thing gets out of hand, we know what will happen. They will come in and provide liquidity. If these things cause any problem in financial markets, in banking sector, they will come in and provide liquidity. Overall, what we are expecting currently is this is a meaningful normal correction, which we've been calling for. It had to come in, and at some point in Bitcoin, creation of a tail higher low above $50,000 and continuation higher into the previous cyclical highs. Same thing for the SPX. But right now it is short. We are in expansionary state currently, lower. Bitcoin is going lower. Bitcoin is probably going to $55,000. I would not be denying that. Preferably at 50,000. Same thing with SPX. You don't want to be short SPX in and of itself. You probably don't want to be short Bitcoin. One thing that we are looking forward to shorting is Tesla. Very, very supportive environment for short on Tesla. Fundamental situation is abysmal, and we've spent a pretty significant amount of time, over a month, above the last key area of significance, key level of importance. I think I can delete all of this thing. Move 12 drawings. This was it. This was the trending support. The tail, this was the tail support for the Tesla. And now we are getting the mean reversion on a tail basis, which is likely if the earnings come in as we think they will come. Earnings are coming out on the Tuesday, next Tuesday, essentially 7 days away from us. Within the window, which is very negative for the equities overall. I've just described why SPX is going lower and probably staying lower, why this is not the time when, we're going to reverse on the pin right now and continue higher in equities and everything in risk assets. No, this is a prolonged retracement that we are getting currently, which is very beautiful for any kind of shorts. If that is, you find any kind of shorts, and if earnings disappoint, which they should, the news, the numbers, the deliveries from China, from Europe, from everywhere else, the news of laying out tens of thousands of stuff, the news of cancelling the Cybertruck, the inventories, everything points to the fact that we're getting mean reversion on a tail basis, which is very nice for a trade currently. And we've stood above this level for quite some time, as we've seen this. After the deliveries came out on this day, on April the 1st, at the beginning of the 2nd of April, we had deliveries which missed pretty significantly, but market didn't continue lower. The Tesla reversed on the back that Elon Musk came out and promised the Honeyland for everybody once again in form of robo taxis, and say this is a complete restructuring of the company. We're going to go, yes, at some point this may happen, but not right now. The only thing that he managed to squeeze from this is a couple 5, 6, 7% rally. That's it. We've taken out all of the last liquidity within the major structures. Right now we took out the trade, we took out another trade in around here, and this was the opening of the previous week, and that's it. And the reality is going to set in, and the numbers are probably going to disappoint once again, and we got to get acceleration to the downside. Within this window of weakness, we should get the deceleration, acceleration to the downside, meaning and we've already broken this area. Right now, this is it. This is the break, and the next stop is $135, $130, $125, and it's being conservative. It is being conservative. 125 is our target over the next month, and I would not be surprised if we revisit 100, obviously depending on the numbers there and the earnings that are coming out. That's it. Any retracement on a trading basis right here in and around this region is meant to be sold into. This is the highest conviction idea right now. So the outlook for Bitcoin is clear. We are going lower, continuing lower. This is just the beginning of this liquidity air pocket that will cause things to reprice lower. This retracement is going to take probably months. So don't get your hopes up of a continuous rally in risk on assets, digestion before in the dollar before the next FOMC. I don't know, honestly don't know what to expect. We gotta see how the market is going to trade. What's the trade setup going to be going into those events? But this was as clear as the day. This was one of the best setups that so we don't trade currency. We observe currency. Obviously, there are plenty of great signal. You can derive signaling value from it. Obviously, from the dollar, from the whole currency complex. But there are these great holy grail setups that occur once every couple of months in currency space. I remember this. We took advantage of this move higher. We took advantage of this move lower, this move lower, this move higher. So this was pretty obvious going into the hot CPI event, which we thought is going to be were going to be hot, and everything in the rate sensitivity complex was retesting its trade support, being at the low end of the risk range, and it was enough for this massive repricing higher. That's fine. The problem is this. Obviously, the most problematic thing is the USD JPY. I don't know what they're going to do. There are a couple of obvious decisions. Either they raise rates significantly in order to combat everything that's going on and defend the currency. They are not going to do this, obviously, for the obvious reasons. They just continue printing money and letting the USD JPY devalue, and at some point they will be continuously selling US treasuries in order to defend the USD JPY as they did right here, which is a futile thing to do. It's just a waste of money, and we shall see whether they're going to continue doing this or not. By the looks of it, they're not prepared to do this right now. Maybe they want to let it settle higher, but if USD JPY will be left to the market forces, this thing can go to 170 to $100 at some point this year. So I don't think because the market is a non-linear thing, we know this. It's not going to be orderly. This repricing is going to be massive and disorderly. The other thing they can do is to solve the core issue and the core problem. For this, they need to repatriate the capital that they've been holding in the US treasuries and US stocks and force this capital to move into the Japanese treasuries, essentially Japanese bonds, to finance the Japanese government, sell US treasuries to finance themselves. It's a pretty obvious thing. This is what essentially it is. The piggy bank is for. Whether they're going to do this, I don't know. The market will force them to make a decision, and we shall see. All in all, this thing is pretty significant, and its points to the fact that US treasuries and the long end of the US yield curve has a long ways to go. In all honesty, I always like to be conservative in my near-term and short-term, medium-term, and targets overall. I always point out the most conservative scenario, but if you look at the inflation, and if inflation is stabilizes even at 4%, while the long end at 30, 10-year, Jesus, 5.5% is nothing. We gotta see it at 7, at 8%. We can see these things at 7 and 8% at some point, maybe even this year. I don't know what they're gonna do about this. We shall see. Yeah, that's no signs of this so far. Yes, we've took advantage of it. We shorted the TLT right now. Let's wait until the next catalyst and play it in the short term as well. These overall, the macro picture puts a very significant pressure on the USD CNH. They are holding it as tight as they can possibly can, but the economy is not picking up. Everything in the previous economic data that has been coming out from China is supportive for the continuous stimulus front loading, and this is negative for currency. They are trying to hold the currency back, but at some point, if this macro environment will persist, we will be getting these moves, these repricings. As they've been trying to hold this one down, then you get a breakout. They're holding this one down, you get a breakout, and yeah. And this eventually, if this is unsustainable and they cannot hold this anymore, they will let it go, and by that point, the implications will be felt on the geopolitical sphere, not only in markets. This will be very negative for the geopolitics all around the world and politics. We shall see. This is a very bad picture. It is being painted right now by the USD/CNH. Oil is beautiful. There is nothing to add or detract from oil. This is a normal digestion in price. We've been calling for this $85, $86. This is where you get the digestion. Now a consolidation, maybe prolonged consolidation, maybe a couple of weeks. But at the end of the day, here we go. We may even revisit 81, but 90, 95 bucks, I think, is assured in the medium term for oil. And if it materializes, holy moly guacamole, with these base effects, the things are looking dire for the Fed. And the thing is, we've been saying this over and over and over again over the past year, that everybody's focused on inflation and everybody's focused on the second mandate, which is stability of employment market, right? Everybody I think everybody keeps forgetting about the third and the most important mandate. The mandate that trumps everything else is the stability in the bond market, and they're trying to make the treasury look solvent. If inflation does what we think is going to do, this is very problematic. The third mandate, the yields at the long end will continue blowing out, and we no longer have the reverse repo facility. The Treasury no longer has reverse repo facility in order to tap into and refinance themselves at 5.5% by printing the short-term paper, which they will have to repay at some near future. They desperately need to get the rates lower because they're putting the US government into the unpalatable fiscal position. They need to get the rates lower. So I don't know. I think they know this. They obviously know this. It's out of the question. The Powell knows this. The math isn't mathing anymore, and the Treasury knows this. This is why Yellen has been coming out with the statements that it is very unwise would be very unwise for the Fed to focus on the minor fluctuation in CPI. She is hinting that they need to lower rates. They desperately need to lower rates because of this unpalatable fiscal situation. Well, it's a dilemma. It's a serious dilemma. We shall see how it's going to be resolved. The gravity, the end game is the same at any point. Definitely will be the same. It's monetization of the debt. The pathway is this is what we're trying to play. The path. So right now, if you have short TLT, this is not the time to short TLT. You're going to be patient, probably wait. We will flag this again, whether this is the time or not. Obviously, the thing you want to be in is gold. I think gold will surprise everybody by the magnitude of the move. It's even unwise to compare this. Let's open GLD better. To compare these kind of moves with the previous bull markets in gold that we had from the 2005, 2008, right? This move, this can be much more drastic. This can be very drastic to the upside. I'm not going to be delving deeper into the gold price, but we've been calling for this for years. Obviously, the question of the timing is very important, but we've been calling since the beginning of this year that if you want to hedge for anything, if you want to do, you don't buy treasury, buy gold. Buy gold, and better yet, buy long-dated gold calls. Especially, you could have done this at any time during the beginning of this year in this region to buy with us a long-dated leaps on gold when the implied volatility was at the record lows, and right now it's obviously expanding pretty dramatically. The thing is, I think the gold will double by the end of this year. If all else being equal, gold will double. Undeniably. Things like this are going to occur. Even things like this. Even in a normal bull cycle. Things like this on a trending basis. This is a weekly chart. Serious 5, 7, 10% corrections over the months easily. And it can be coming in the next month if the Federal Reserve comes out and says, yeah, we are going to raise rates next meeting. Fucking hell, this guy is going to die. Everything is going to turn on itself. They're not going to do this. We think the next Fed meeting is going to be bullish because he's going to be taken back. He's not going to be very decisive in his guidance that they are going to be hiking rates again. No. But once again, the market will call the bluff, and if he's going to be decisive enough, gold will rip on this. And if plus the inordinate amount of demand that's coming in from China and all around the world, and if previously the prices of gold were set in London and New York, right now the marginal price of gold is being set in China, and the demand is massive. The gold is a very small fish in the sea of a global assets. It can double, triple over the course of the upcoming years easily. Okay, this is very all this is very exciting. Obviously, we shall see what's going to happen. Gold, obviously things like copper we've been flagging, and we played SCCO very successfully on the upside. One of the strongest names in copper space, SCCO, FCX. Let's see better. Everything points to high inflation prints. The global economy is re-accelerating, and the next inflation wave is probably it's already here, I guess. That's all fine. Rates, once again, not much movement before the next FOMC meeting and before the next PCE report. Obviously, we shall see what's going to be happening here. But at the end of the day, as I've highlighted, 4.6, this range, 5 to 4.6, is going to be held, and at some point during this year, we're going to move out from this range and continue higher. All else being equal, obviously, I'm looking into the future here, but from the perspective of the immediate trade, what can be put on? Nothing, essentially nothing. We've took our short, TLT short entirely. At the beginning of this day, we closed all of it, and just waiting for the next setup. This is one of the the highest conviction idea right now is to short the U.S. government, long-term U.S. government debt. The other thing is to short something in the equity market. You don't want to be short SPX, you don't want to be short Meta, you don't want to be short Microsoft. This is a buyable dip over the long term, over the next 3 to 6 months. This is a buyable dip. And one thing is, the possibility is that we might see something like 4,700 retracement. We probably not going to see anything like this anymore. It's going to be much more volatile and much more less directional. It's going to be very hard to make money by the over the next 3 months. Very hard if you're trying to trade SPX. Everything in the world equities is supporting this retracement. Obviously, everything is dependent and 80, 90, 100% correlated to the SPX. This is bad. This is very bad. Chinese indices breaking trend again. HSI breaking trend again. With all that from stimulus, we broke trend again. We've said that if China wants to go, it has to go right now. It cannot afford to break this. It just did, and this is fucking bad. This same thing, the continuation of the same dynamics that we've seen over the past year, or we're probably going to continue. And at some point, the USD/CNH will not sustain, will not be able to hold in and around that tight channel that they're trying to keep it in, and we're going to move higher. The things are just beginning. The things are just beginning. Atrocious, horrible major constituents of the indices like Baidu. Horrible. Everything is horrible in China. Apple, what a volatility. What a beautiful volatility. The thing is, this is the worst case scenario for Apple, unfortunately. What just happened is literally the worst case scenario for Apple. Why is it? Well, the market is trying to put everybody offside, obviously, with this move higher on a... You can assign any catalyst for this, that they came out with a new announcement that they're going to remodel the new MacBook and they're going to make it super, which... meaningless news, but the market ripped on it. But from the floor perspective, market wanted to rip higher anyway, because we couldn't move lower. We've been saying that Apple is a short Apple, but we couldn't move lower because the environment wasn't supportive of this move lower. And we've grinded lower, and when you're grinding lower very slowly into the key support area, usually you're getting the flush out before the move lower, before the final move lower. And this is what we got. Any meaningless news could have caused that, but we've moved higher, retested the previous, we've taken out the previous tail or trend resistance, and essentially confirmed the creation of a tail lower high in around this region. And when these negative dynamics in the macro space will continue, if they will continue, plus the next, by the way, the next earnings report, which is going to be coming, when is it? 2nd of May, in a couple of weeks. I think Apple is losing this level. Everything is supportive for Apple to lose this level, and we are seeing $150 on Apple again. Nothing new, nothing surprising, nothing extraordinary, absolutely nothing extraordinary. This is what you get when the company is maturing. They cannot transform themselves right now. Everything is slowing in Apple. They're still making billions upon billions of dollars. It's still a brilliant company, but there is no growth. And this is natural. This is what you have. You trading in a consolidation in a channel for years upon years upon years. You're trading in a channel from top end of the channel to the low end of the channel. Only natural to revisit the midpoint of the channel right now. The environment supportive of this, and the numbers are Horrible. There is no growth. Why would you be? Why would you be paying? What is it? Don't remember the price to sales and all of these metrics, but to see 150, 130 for Apple, absolutely easy, easy. They cannot yet reinvent themselves. They're still the iPhone company. They're making phones and MacBooks. That's all they do. They try to go into something else, but this new Apple Vision Pro is a pathetic, not only pathetic invention, but pathetic way of trying to create something of value, something new of value. It's not yet ready, the infrastructure, and it's not being received as massively. Plus, it costs like $4,000. Are you fucking kidding me? Nobody's buying this. You cannot sell it in volume. Yes, your luxury brand. I don't know. I just don't know. There is a trade in Apple. My conviction is coming back. I don't know what other news that can be that are justifying this move lower, but the flow is pointing to the fact that this is it. We might consolidate a little bit longer in and around this area, but then the probability of moving into 150 is very high. And let's see if we. I don't want to open up the exchange right now to look if we have the skew, but I believe long put the skew in Apple is still present. Pseudo, okay. And let's see if we can put something for 2nd of May. Long Apple. May 10th. Let's see what we can find in May 10th. I like this expirational. 160, 155. Is there anything that makes sense? 160, 155. From the perspective of the 1 to 3, 1 to 3.5. Not that pretty, not that promising. Let's shift it lower if we can. 150. Yeah, 150, 160, 160, 150, 136. Yeah, that's much better. And now almost 1 to 10, also reasonable. But I like 160, 150. Really like this one. This seems like a reasonable thing to do. To putting a short on Apple. This seems really, really, really fine. Okay, that's okay. Let's see how the week closes. I believe we're going to consolidate, and the move in Apple might be happening over the next. I don't know whether we're going to break this level before the earnings or after the earnings. Very interesting, but this makes a lot of sense. 160, 150 put spread makes a ton of sense right now. A ton of sense right now. Amazon, once again, this is not the environment where you, like it was the 2022, like we've seen this short period in 2023 at the end of the autumn, that, yeah, you want to short things. This is a pretty meaningful short setup. Overall in macro space, short everything. No, short very specific things and be ready to buy something that you like. But over the next, I think we're going to be trading pretty negatively until the next FOMC meeting, which is the May 1st. So where this leaves us, this is what we have. Interesting. What is MU doing right now? Yeah, naturally. Nvidia is holding out pretty nicely. The most of the move has already happened, obviously. CMSCI is holding up pretty nicely. I believe there's one more move in equities lower, in the indices lower, and in Bitcoin lower as well, which we're trying to capitalize by shorting Apple and shorting Tesla. Hood is very interesting. It is very interesting thing. Short Apple, long Hood. Can you believe that? The earnings are far away as of now. There is no setup. As soon as we see any green shoots in Hood, this will be a nice short. Nice long. Overall, this is what I have for you right now. Be ready for repricing in Bitcoin lower to $50,000. I would say this. Solana, things like Solana, things. Obviously, you don't want to be holding anything in crypto right now, but you want to be preparing for at some point getting long of all of these things in and around this region. But don't look at the price, only at the price. Look, we will be making a decision when the time comes, when the things are going to be picking up again. We're going to see what this setup, the cross asset class setup in the macro, in the rate sensitivity, what's going on a trending basis, what's the Fed decision, what's the inflation data, what's a lot of things. You pile these things together and you make a decision on a trending basis. We believe at some point this will be a long, maybe in the next 3-4 months, maybe this is going to be long again. Right now it is not. So this is it. Yeah, I wouldn't be shorting the dollar. Okay, that's enough. That would be enough.